Higher energy prices are costing the American economy $500 million every single day.
Since US and Israel struck Iran, oil prices have surged over 50%. The Strait of Hormuz, carrying 1/5 of the world's oil, is effectively shut down. Brent crude trades above $110 a barrel. 3 weeks ago, it was $70.
The pump price is just the smallest piece of what is actually coming for you.
4 more waves of price increases are heading toward your wallet right now.
Your mind is actively working against you, and that will cost you if you ignore it.
National gas average jumped from under $3 to $3.70. Diesel surged 36%.
The average household now pays $10 to $15 more per week just on fuel.
Your brain files it as annoying but manageable.
That filing is dangerously wrong.
Psychologists call it mental accounting. We split money into invisible buckets unconsciously.
When one bucket overflows, we slash what feels optional. Dining out, gym, vacations disappear.
Gas is just wave 1. A rolling series of economic shocks is already in motion.
Wave 2 is hitting now. Groceries, especially perishables, meat, dairy, produce, are already exposed.
Diesel powers refrigerated trucks. A 36% spike means perishable food costs soar. Retailers have almost no margin left. When they stop absorbing costs, sticker prices jump fast.
Wave 3 won't arrive for months, but it is already locked in. Fertilizer prices. Fossil fuels make up 8% of fertilizer costs. Iran, Qatar, Saudi Arabia are top producers.
1/3 of global fertilizer passes through the Strait of Hormuz. It is currently shut.
The food you eat in fall is getting more expensive right now because of this.
Wave 4 is airfare. Jet fuel surged 85%. Airlines have already raised fares.
Unlike gas prices, airlines bake fuel costs into pricing months ahead. High fares stay high.
Wave 5 is interest rates. The Fed's expected rate cuts are now dead on arrival. Mortgages, car loans, credit cards, the math just changed underneath you. Borrowing costs stay elevated. When millions of households freeze simultaneously, that collective pause can drag the whole economy down. This is anchoring bias. Your mind grabs the most visible data point and stops there. The gas price number became a proxy for the entire crisis. That is the trap. One economist estimates gas alone could push monthly inflation to 1%, highest in 4 years. The IEA called this the greatest global energy security challenge in history. Not moderate, greatest.
This is exactly what happened in 2022. Russia invaded Ukraine. Inflation hit 9%.
By the time most people grasped the full scope, the damage to purchasing power was done. The S&P 500 dropped nearly 7% from January. The Dow lost 4 consecutive weeks. Gold spiked above $5,400, then crashed 10% in 1 week. The VIX fear gauge surged from mid-teens to nearly 32. Even safe havens failed. Your amygdala screams one word during a market crash: sell. That instinct is exactly wrong. Losing money hurts twice as much psychologically as gaining the same amount feels good. Across 20 major geopolitical crises, the S&P fell 6%, then recovered consistently afterward. Average first-month loss was just 0.9%, followed by 3.4% gains.
In March 2020, the market crashed. 57 days later, it was fully recovered. People who panic sold at the bottom never got back in. The recovery happened without them.
Miss just 10 of the market's best days over 20 years, and returns get cut in half. The behavior gap exists because people buy when optimistic and sell when afraid. Exact opposite works.
The worst-case scenario economists fear is stagflation, rising inflation and slowing growth at once.
The Fed is stuck. Cut rates and inflation worsens. Raise rates and recession deepens.
If Hormuz stays shut, analysts project Brent crude approaching $130 per barrel. Every major oil shock in 50 years was followed by recession. The pattern is reliable.
Current supply disruption of 10 million barrels per day is the largest in oil market history.
Prices rocket up fast, but drift down like a feather. Relief will not be instant.
Even if the strait reopens tomorrow, weeks of ramp-up and months of recovery follow. Do not panic, sell your investments. Research shows it is the single most expensive mistake investors make.
Moving to cash replaces market risk with inflation risk and opportunity cost. No risk-free option exists. Pressure test your emergency fund. Advisors recommend 6 to 12 months of expenses in accessible savings. Top high-yield savings accounts pay over 4% right now. Build your cushion today.
Emergency funds aren't just financial tools. They are insurance against your own fear response.
Audit your spending now before all 5 waves land. Cut discretionary before you have to.
Keep investing on a regular schedule. This feels wrong, but decades of evidence back it up. Dollar cost averaging works because of the volatility, not despite it. You buy more shares cheaper.
The shares you buy during this conflict will likely be your best investments ever made.
Map your energy exposure. Long commute? The fuel-efficient vehicle math just changed for you. If you carry high-interest credit card debt, attack it now. The Fed is not cutting rates.
The households that fared best in past shocks adjusted earliest, not those with the highest incomes.
Small, unglamorous moves. Trim spending, fortify savings, maintain investments, reduce debt. These create real distance.
Early adjustments, compounded over 6 to 12 months, create an enormous gap between prepared and unprepared.
Most people won't act until wave 4 or 5 hits their bank account. Your window is open now.
The anxiety you feel is the correct signal. It means you are paying attention. Use it. The mistake is not feeling fear. The mistake is letting fear make your financial decisions. Review your budget. Check your emergency fund. Keep investing. Map your energy exposure. Then stop doom scrolling.
You have navigated uncertainty before. The only question is whether you act or let disruption decide.